The sensex and the nifty end with solid gains in today's trading session. A big bounce back is what we saw, though the session was filled with volatility.
Shares of Paytm hit lower circuit once again as uncertainty lingers ahead of the February 29 deadline. Macquarie expects another 30% downside in the stock and sets a target price of 265 rupees.
Hindalco declines after overseas arm Novelis significantly expands its capex plan to $4 billion and pushes back the project completion timeline. Metal stocks also decline. On the other hand, Coal India has a solid rally, post a very strong showing in Q3.
Hello and welcome to Markets Forward, the show where we get you all of the key action of the day and, of course, the big cues that you need to watch out for tomorrow. I'm Bandyopadhyay and with me, as always, is Nigel D'Souza. Hi, Nigel.
Well, hi, Sudip. Well, in the next half hour or 20 minutes odd, we've got you covered. We'll get you all the big events that happened today and we'll gear you up for tomorrow's trading action as well. We'll get you all the top corporate voices as well as events to watch. But Sudip, let's kickstart the show with what went on today.
Well, what went on was a bounce back and a rather nice one at that. And I suppose a lot of the bulls will be very relieved because given the kind of breakdowns that we were having yesterday on a lot of the key indices, there was good buying support that came in, particularly on the large cap space. So let's just pull out some of the graphics, and that's very evident in the manner in which the Nifty moved, the Bank Nifty moved, and by the end of it, even the mid cap index started to move slightly higher. On the large cap space, the pullback was led by two big pillars of the market. One is frontline banks and the second is Reliance. Of course, as we told you in the headline, Reliance hit that historic level of 20 lakh crores in market cap. We'll talk more about that as we go forward. So good bounce back in the large cap universe. Some profit taking in autos, but otherwise it was pretty okay. And then the PSU question. That was a big question in the market today, given the kind of big fall, big declines that we saw yesterday. Today, a lot of these stocks were actually getting the money. They were getting buyers back in. Case in point would be some of the railway stocks. Case in point would be some of the PSU banks as well. So select PSU buying was back, and that was the hallmark of today's trade. But then more headlines, and particularly from some of the companies that you track, Nigel.
Well, that's right. But today, the chart for me that is most encouraging. And if someone saw their portfolio in the morning, say by 9 to 10 a.m. and they would be like, oh man, it's going to be another day, where we're going to see some pain. But at the end of the day, your portfolio will be looking quite good. Because you pull up the crisscross lines, the advanced decline ratio from around 4 declines for every one advancing. Well, by the end of the day, we ended at even Steven. And at some point of time, that advanced decline chart should come up for you. The Nifty Bank, yet again, it went to that 200 EMA. Yet again, it bounced off that mark. So the bulls actually will be feeling good. That 200 EMA seems to be a level where, we're bouncing off that mark. And, a lot of experts have been saying that if it breaks more than 2-3 times, that's going to break out. But it's not breaking down as of now. So that's good news. At least you're hanging in there. You're playing that bit of an innings, defending. When you get a chance, you can attack. And finally, Hindalco. This market told you there is no room for error at all. They announced a capex expansion of close to around $1.5 billion odd, but they lost market capitalization of $2 billion odd. That's how severe this market is. The room for error is very limited. We saw what happened with HDFC Bank a few sessions ago. And now on Hindalco as well. We're talking about frontline names falling more than 10% in a single trading session.
And this at a time when PSU stocks come out posting losses, they post a decline in the top line. And you had a one-day correction and the buyers come back. That is the market we're in. Anyhow, let's get you the lineup on the show today. Here's what we have in store for you. We'll start off with the top movers of the day. Vivek is in the house with all of the key details of what went on. We'll talk about the sector of the day, and that is the metal space. Of course, Nigel's going to tell us why we picked that as a sector of the day. And then, of course, we have D Street Chatter coming up with Nimesh. He'll talk about BPCL today and what the reason is behind the buzz in today's trading session. Last but not the least, as always, some cues and some events to watch out for tomorrow's session. But let's kick it off with the key movers with Vivek. Vivek.
Well, thank you so much for that. Very exciting trading session, given the fact that there was so much volatility, but towards the end of the day, you did see a significant amount of recovery. First stock on our radar has to be Reliance Industries, crucial market cap, 20 lakh crore. That's been crossed. The second stock was Coal India. Coal India amongst the top movers today, given the fact that yesterday, these stocks, especially PSU stocks, quite a bit of correction. Today, a sharp recovery coming in after a good Q3 results. The next set of stocks that we're looking at are the railway stocks. Last couple of trading sessions, they were severely butchered as far as selling pressure was concerned. But have a look at them today. Most of them coming back quite sharply. In fact, IRFC high by almost 15% in the session today. The next stock is from the broader market, one of the top gainers there, one that we don't discuss too often, but ended quite higher in the session today. Time Technoplast. The company delivered a good set of results. Along with that, a divestment of an overseas subsidiary that the market was anticipating for quite some time. And on the back of that, the stock ended higher. GMR Airports. Now, this particular stock gained today quite significantly. It was a surprise inclusion into the MSCI Standard Index. It wasn't in most of the analyst expectations, but on the back of that, this particular stock gained. The rest of the stocks, most of the market participants had already expected, and that factored in. The next stock on the radar is Siemens. Very good set of numbers, positive commentary. Company sales, private capex coming back, beat the poll, and the stock continued its high momentum despite the fact that it's run up so well in this particular year itself. On the other hand, some of the losers in the session today. First stock that we have to discuss is Paytm. A Macquarie downgrade coming in. This volatility continued over here, but towards the end, ended at the lower circuit. Like Nigel mentioned, Hindalco, the capex guidance higher than what the market was anticipating. Stock was amongst the top F&O laggards. And lastly, from the broader markets, Rishabh Instruments. A weak Q3, we did have the management on the show, but despite that, markets didn't really like the kind of margin erosion the company saw both on a year-on-year basis and on a sequential basis.
Okay, all right. Thanks a lot for that, Vivek. Well, joining us on the show, we have Jai Bala of Cash Secures, as well as Sudip Bandyopadhyay, who joins us on the show. Hi, Sudip. Hi, Jai. Thanks so much for joining in. Well, Jai, let's come across to you first. You had the Nifty bank that bounced off yet again. Do you think it's testing that level too many times, and now we are bracing for a breakdown?
That's right, Nigel. I've been pointing to banking indices having a limited upside since May of this last year. And from the point, if you compare the banking index to the Nifty, the banking index have starkly underperformed the Nifty and the broader market. So, yeah, and from the short-term point of view, the January's decline into 44,429, is an important price structure. And when the markets drop below 44,429, I think that will seal the fate of the banking index as well as the major markets, major indices from a medium to long term point of time. So once 44,429 is taken, that's going to have a significant impact on the overall direction of the market.
Okay, that is the overall view on how things are shaping up right now. Stay on. We'll have Jai more questions for you and a bit more questions for Sudip as well. But let's actually move to the stock of the day. And that had to be Paytm because the stock was down 10%, as we just told you. Now, this after a big downgrade came in from Macquarie. The brokerage firm has slashed its price target on the stock to just 275 rupees per share versus its earlier target of 650 rupees. Macquarie's banking analyst Suresh Ganpati told us earlier that Paytm's business model is in question now because of the uncertainty in their lending business. He also added that lenders are actually curtailing their exposure. At least some of the lenders are curtailing a bit of their exposure to the company. Take a look.
As we have always been saying, that the main business which makes them money is obviously the lending business, right? So they act as like a digital service, loan service originator, or a DSA for that matter. And now, in the absence of the fact that you may not necessarily have the same amount of data, customer loyalty, two-way customer flows in terms of customer versus merchants and vendors, not sure how strong would be their ability to retain the customers in the overall ecosystem. And I'm talking about customers, talking both the retail consumers as well as the merchants. So their ability to monetize the data comes into serious question, right? And clearly the view we have taken, and we have spoken to a lot of lenders here. So obviously we can't be taking any names here, but the feedback that we have got is that they are curtailing business. So my point here is that if at all the lenders decide to go back on cutting down their exposures to Paytm, then clearly the business model is in question, because that's the biggest profitable business for them.
Are the banks saying that they will not, allow this kind of a relationship with Paytm unless they get RBI clearance? I thought I heard Amitabh Chaudhary say that they will specifically ask for clearance. You think that will be a roadblock?
See, first to begin with, any customer onboarding of Paytm, the complete due diligence have to be done by the bank. It's very clear. Anyways, they were doing it for the lending side. Now, even for the other businesses like Paytm's payments business or wallets or whatever you're talking about, any business that they get, even the nodal accounts for that matter, every account needs to be completely, the KYC has to be done by the partnering lending or the banking institution, right? So that makes the entire process very cumbersome.
All right, well, let's address a couple of stocks in the metal space then. Let's address Hindalco first. Well, the India business numbers came in during market hours and they look very good. Whether you're looking at the aluminium business, whether you're looking at the copper business, both of them were better than what Kotak had put out in terms of estimates. And you put them together, that's the aluminium and copper business. Well, the total number, EBITDA number was more than 3,000 crores. And Kotak was estimating a number of around 2,600 crores. So that number looked quite good. And they repaid some debt. So the consolidated debt number as well came down. So that gets a tick. Novelis, the numbers were in line, where they look at the EBITDA per ton, which came in at close to $500 per ton. And they're guiding that it goes to $525 per ton in Q4. And from there, they're saying it can move to around $600 per ton in the time to come. So no worries there. What's the problem then? They went ahead and increased capex. They had earlier earmarked close to around $2.5 billion odd of capex for this unit in the United States, which is 600,000 tons. Now they have upped that by close to 60% to more than $4 billion. The street didn't like that. And even in terms of commissioning, they indicated it could be a little bit more delayed. Equirus, well, they say they have an ad rating on the stock, but they say that the IRR will now be in early teens in comparison to late teens that they were factoring in earlier for this project. While Incred says, be brave, go ahead. The stock has dipped, so you should look to get in because they like the capex plans. So that's about Hindalco. Let's speak about Coal India, though, Sudip. That one, in fact, I said it in the morning and sell. Those numbers look good. The top line was a big beat. Margins as well came in much better. And the blended realizations were down on a year-on-year basis. But that's because it was factored in. E-auction prices in the base year were very, very high. Though on the FSA prices, there was some marginal increase because of the price increase they took in May 2023. That's the positive, though. The e-auction premium in comparison to the FSA, that recovered to more than 110% in comparison to around 85% on a sequential basis. And the street liked that number. Besides that, costs seem to be under control and the net profit number got a bit of a boost up by higher other income. Novama, they went ahead and they increased their target price. They've also increased their estimates. They're factoring in dividend of 25 rupees each for the next couple of years. And they're expecting volume growth of around 5% per year. While Jefferies, they as well went ahead and increased their target price. They've increased their EPS estimates. They say even after such a big run, the stock trades at around 8.5 times, which they believe is not very expensive. They're giving it a multiple of close to around 10. So Coal India, the star of the day. Hindalco, well, got hammered from the word go.
Okay, well, let's take a couple of these stocks to our guests then. We do have Sudip Bandyopadhyay with us. So Sudip, a quick fire. There's Paytm, which has its troubles continuing. There's Coal India, which is one of the better PSU earnings in the last few days. And then there is Hindalco with their Novelis issue. Just quick views on maybe one or two or all three.
Coal India I like, and I've been liking Coal India for some time. I think the market wrote off Coal India pretty prematurely when there was all this excitement around green energy. We have to understand one thing, that the traditional energy, thermal power, is going to continue for the foreseeable future, maybe next 20, 30, 50 years. And the way the Indian electrification has happened, completely electrified country, India today, the electricity demand has gone up. So demand for Coal India's product, which is coal, has gone up significantly. This helps Coal India. Efficiency of Coal India has improved, and the e-auction realizations have significantly improved. All this makes Coal India an attractive proposition, and absolutely even today, I think the stock is attractively valued if you look at the market in its totality and the kind of dividend payout they have been doing. So for a long-term investor, Coal India is definitely a good buy even at current levels. As far as Paytm is concerned, it's definitely avoidable. I told you last time when we interacted that it's a falling knife, let's not catch it. It's impossible to transition more than 1 crore customers in next 15, 20 days to a bank or other institutions where they have to do the complete KYC. So I think it's a pretty pathetic situation as far as Paytm is concerned. Unfortunate, but that's the reality. So it's complete avoid. As far as Hindalco is concerned, discussed, and I think the capex increase is definitely what the market doesn't like, and the IRR of the project gets depressed significantly. So under the circumstances, I think we'll have to wait and watch as far as Hindalco is concerned. Utkal performance has been fantastic, Utkal Alumina, and that kind of holds the domestic business in high state, but it's a wait and watch for Hindalco.
Got it. All right. What about you, Jai? What's your view on both these two majors? Coal India looks strong. Hindalco was sulking. Levels you're looking at?
That's right, Nigel. Coal India, I agree. Fundamentals, technicals agree with the fundamentals, and it's got an important breakout on a longer term time frame. But it's looking tired in the extreme short term, so there could be a short term pullback. So so Coal India looks attractive from a medium to long term perspective rather than a short term. So a pullback towards sub 400 might be a good entry point for this. When it comes to Hindalco, now I've been pointing to the macros being negative for copper, and copper is set to drop below the 2022 low. So I'm sure Hindalco will likely to come under more pressure as we go forward in the next few weeks to the next few months. And the 2022 high of Hindalco and the recent high of Hindalco have been pretty close. So that could also either be a double top or a lower top. So technical structure as well as macros are looking slightly negative for Hindalco. So the pressure is likely to continue over there.
Okay, so both the technical and the fundamental view seem to be converging on these two stocks. Gentlemen, thank you very much for joining in. Appreciate you being with us and analyzing the trends for us today. Well, with that, let's move on to the other headline. Reliance has become the first Indian company to reach the milestone of 20 lakh crore rupees in market capitalization. The feat almost ties it at the 43rd spot with Netflix in the global market cap sweepstakes. The Reliance stock has gained about 14% in 2024. So fantastic new year for Reliance for sure. Sonal is here. She's been looking at all the trends. Sonal.
Well, yes, Reliance Industries has topped the milestone 20 lakh crore in terms of market capitalization. This is after a 14% move in this year so far, 27% in last 1 year and 139% in last 5 years. Most brokerages, they continue to be bullish on the stock, with 80% of them with a buy call, 14% with a hold call, and only 6% of them with a sell call. These are some of the targets in terms of stock prices by different brokerages. Well, most of them are above the 3,000 mark, barring Citi, which has a target price of 2,910, and highest by Centrum at 3,299 per share. Others are anywhere between 3,000 to 3,175 rupees a share. Now, after this move, it is 43rd largest company in the world in terms of market capitalization, which is the same as Netflix at $214 billion, but higher than PepsiCo and Novartis, to name a few, and slightly below Coca-Cola, L'Oreal, Accenture, to name a few. But what are the triggers for the stock going forward? Well, quite a lot. Bernstein says the spin-off of different businesses would be important. Additionally, telecom tariff hike, which is expected, update on new energy verticals, and higher free cash flow post the 5G build-out could be important. Morgan Stanley says the clarity on solar panel production, the unwinding of investment cycle of 2-3 times value creation, where every investment has added around $60 billion to the investment cycle and market cap, will be important to track. And Citi says surprise and size of telecom tariff will be key to watch, and the spin-off of the Jio and retail business is the most awaited event. Additionally, deleveraging will be important as well for the stock.
Okay, all right. Thanks a lot for that, Sonal. For the time being, though, we'll slip into a short break. Before we do that, let's take you through some corporate opinion. Mayank Singhal of PI Industry says that they are maintaining the growth guidance of around 18 to 20% for FY24. He also adds that they will generate revenues of around 600 to 625 crore rupees in FY25 from their pharma business. He added that the company is looking at inorganic growth too, while Amitabh Chaudhary of Axis Bank says that credit growth can't sustain if deposit accretion does not pick up. He also sees reasons for margins to compress and credit costs to move higher. Well, with that, we'll take a short break. You come back, we'll get straight to our popular segment, D-Street Chatter, along with all the markets, events you need to track on the other side. Don't go anywhere.
Welcome back. You're with us on Markets Forward, and as promised, let's get straight away to D-Street Chatter. Nimesh is here to give us an insight into all the dealing room buzz today. Nimesh, so what was top of mind for you?
Well, so a good recovery in the markets, especially in the intraday, and largely led by the financial names. And within financial, it was the private banks who actually had a big move. in the second half in today's trade. But in terms of individual stocks, the first stock on my list is BPCL. It's been the stock of the year so far, up 30% Y2D. But now I understand there's going to be a large block deal in BPCL very soon, so that's something to track there. The second name is Bandhan Bank. While the private banks did well, Bandhan also recovered from intraday lows, largely on back of some contra buying from some larger FIs. So at these levels, some bit of interest seems to be back in that particular name as well. The third is Escorts. That was under pressure today, largely on back of self-close. And remember, the company had actually cut the guidance as well post the Q3. So a bit of underperformance in that stock, largely on back of self-close. And the last is both Adani Green as well as Adani Transmission. Some bit of institutional interest seems to be back on that stock. So for the second day running, the delivery volumes are quite high and looks like some bit of buying interest is back in both Adani Green as well as in Adani Transmission.
Got it. Thanks, Nimesh, for that. Well, and before we wrap up, we'll bring you some key market events to watch out for. Sonal joins us with that list. Sonal?
Thank you for that. Well, fag end of the earnings season and earnings continue to trickle in. We have Mahindra & Mahindra, which will be reporting numbers tomorrow, followed by NMDC and Sun TV, the other two important stocks to be watching out for. Moving on, we have earnings call from HOEC, All India, MTA Technologies. This is a few of the stocks in the long list of con calls that we have to talk about. In terms of dividend ex-date, it's a long list. We have Sumitomo Chemicals, Minda Corp, Good Luck India, Dhanuka Agritech, HIL, Archean Chemicals and Procter & Gamble as well. This is mostly related to our own markets. Let's talk about the global markets because there are a lot of global events. We do have the inflation rate coming in from the UK after US today. That will be important to watch out for in terms of Jan inflation data. And in the European Union, Q4 GDP will also be out in terms of, and also the employment data, the industrial production data. So some of these things will be on our radar.
Okay, all right, Sonal, thank you very much for bringing us up to speed with all of those events. With that, we're out of time on this edition of Markets Forward. Many thanks for watching, but news and updates continue right after this break.